positive expected surprise has come on the GST front. The cabinet has finally given the nod. It was expected that it would once again get footballed between the centre and the states, between the empowered group and the finance ministry. But things have clearly been discussed and a conclusion hammered out, however compromising. Is that going to mean a lot of benefits? Harsh Mariwala, Chairman and Managing Director of Marico, and quite clearly the best voice from the FMCG space, joins us for a discussion. Also joining us in a minute will be Sachin Menon, the CEO of Tax and Head of Indirect Tax at KPMG. Gentlemen, thank you very much for joining us. Mr. Mariwala, we understand now that the GST amendment will be placed in Parliament in the winter session itself. Are you getting a sense now that we are going to see it applicable on April 2016?
I think this is a very positive development. This was stuck for some time, and I think the cabinet cleared it. We have to see whether it clears the Rajya Sabha, because that's where one more hurdle will come in. But I think clearly this is a big milestone which the government has crossed. I think there are some more milestones before GST comes into effect, and these milestones are related to the rate structure and the exemption structure, and particularly the IT backbone which will support GST in terms of its readiness, as well as training individuals to operate the new IT backbone for making GST effective. So I'm presuming that this will go through the winter session. If it goes through, then the big hurdle next one is the rate structure, because that's where the big tussle can come in.
Exactly. So that's what I wanted to ask you about, really. We understand that at the very least it could be a 24% tax, and there are people talking about the combined rate being even higher. Will that sap out all the advantages, or can you live with it, because that seems to be the current rate anyways?
Yeah, I think a lot will depend on what is in the exempted category and what is there in the revenue neutral rate. But clearly 24 or 27, as they were talking earlier, is much on the higher side. The revenue neutral rate, which was suggested by the Kelkar committee and subsequently by one more commission, was that it was in the range of 12 to 16%. Now that going to 24% is very, very high. And I think that will negate many of the benefits of GST. It will lead to also tax evasion, because 24% is very, very high. And I think in the state greed to increase revenues, we should not overlook the interest of the consumer, because ultimately this will get passed on to the consumer and will lead to higher inflation and will lead to higher cost of living. So it's very important that you look at all the stakeholders, and not just the state government and the central government, and all the stakeholders, including the consumer as well as the industry. So I think it's very important that the right rate structure is finalized, and I think that's where I see another big milestone to be crossed.
So given all these challenges, sir, do you think the 1st April 2016 deadline seems a bit unattainable or seems a bit ambitious? What will you bet on personally?
I think we have enough time to resolve the rate structure, so I don't think time is an issue. It's more so in terms of, are they able to drive a consensus which is sound to all the stakeholders, and that's where I'm coming from. You know, in our haste to launch GST, we should not agree to whatever the state's demands are there. So far, we have agreed to many of them, including the petroleum products being kept out. But I think on this front, the government will have to sensitize the states that this can harm the consumers if the states are suggesting very high rates of revenue neutral taxes.
But Mr. Mariwala, assuming for the sake of getting the states on board, a high rate is agreed to, it is widely touted that the coming of the GST will allow fewer people to escape from the net. And therefore, as the tax kitty balloons because of simply more compliance, simply more people in the net, maybe the rate goes down. So even as a temporary, neither you nor I will want the tax to be high. I, as the consumer, will not want it. But if it is high temporarily for a year or so, or year or two, would that still be worth a price paying if we ultimately get a more rational tax structure?
I would not agree with you. I don't think that we can go ahead with a very high rate of taxation, because it can negate, it will lead to tax evasion at the retail and especially in consumer products. People will just not pay taxes. I don't think it is sound at all, because by the time you actually start seeing the benefits of GST, it will take 2-3 years. And that extra 5 or 10% which the consumer will pay is too high. So I think the states have to realize, and once having got used to a very high revenue rate, the states will be very reluctant to lower the tax rate. So I for one believe that we need to drive this down to the states, saying that basically they have to do something which is sound for all the stakeholders and not just themselves.
So one final question. Keeping the tax rate aside, simply because there is going to be a more rational tax structure, how much do you think your own margins can improve? Simply because you will have more rational warehouses, more rational flow of goods.
So I think for all the stakeholders, all the companies,
yes,
whether
all companies,
there are many others, those who have all India operations, we are, because of the current the way tax structure is there, we have to have a depot in each state. So we need not have depots. We may just have depots. We have not done a study on this. So there will be definitely some reduction in logistics cost, and the other benefit would be in the area of overall simplification of tax rates, filing multiple returns. So it will free us a lot of bandwidth in terms of doing work and unnecessary work, which will get freed up. Third is to actually benefit will be in the area of freedom to buy, because now we need not worry about, I think whatever we buy, we can get tax credit, whether from a registered, non-registered dealer, from somebody from backward area. So I think these are all benefits which are difficult to quantify in financial terms, but definitely these are important benefits. But the larger benefit to the government will be the overall increase in tax revenues and ensuring that everybody is covered in this value chain.
Fair point, sir. Thank you very much, Mr. Mariwala, for joining in this discussion. We also have Sachin Menon, the COO of Taxin, Head of Indirect Tax at KPMG, joining us. Before we get to Sachin, that's Arun Jain of Polaris speaking at the listing of Intellect Design Arena. I think the stock is listing at 72.70. I think that's a little lower than what you were telling us.
No, I think most of them said that it should list around 75 to 80. So that was the broad range. So it seems largely in line with what the street was anticipating.
Okay. With that, let's get to Mr. Sachin Menon. Sachin, good morning. Thank you very much for joining us. What is the sense you are getting? Will the rate be at 24% or 26%?
Good morning, Lada. If you look at the current proposal which is coming out of NIPFP report, I felt that it is completely impractical for two reasons. See, there are various stakeholders in the GST implementation. It is not just government. It is the government, the industry, and the consumer. So, end of the day, the buck stops at the consumer. So, it is expected that the tax would be a rational rate, and that would help selling the idea of GST with a much more easier scenario. So the point is that the 27% which the empowered committee has projected has been based on so many assumptions and presumptions. For example, now they have considered the tax revenue of CST at the rate of 4% instead of 2%. And they also said that there will be two rate structure. One is 4% and other one is 27%. I don't think that there is going to be a 4% rate structure for most of the goods, and that could be only essential goods or whatever. So the assumptions itself is something which may not be real for that matter. And the report also saying that if the minimum rate is raised from 4% to 6%, there will be a 3% reduction in 27%, which means that 27% should go down to 24%. So in my view, the rate could be somewhere between 20 to 22% could be an ideal rate. And simultaneously, the service tax rate is also going up. So that would compensate the difference. So maybe I would go with maybe the Finance Commission's sentiment to say that if you are having a higher rate, evasion will be more. Second is that the compliance will be low. And the third thing is that there is a bigger segment which is not paying tax today. With the GST coming in, they start paying tax, not only the indirect taxes, but they also pay the income tax. So this is going to be a great boon to the state and the central government.
Okay. Hi Sachin, so I was reading that the petroleum products will be included, but there will be a tapering compensation. For the first 3 years, they will not be taxed, and apart from that, even entry tax, will be included. How will all this, fit in, and what kind of a boost will it provide?
Well, so there is some confusion whether this is a zero rated or nil rated. So I understand that it is zero rated. When petroleum products are zero rated, what is the implication would be that under GST schedule, it will be, that rate will be zero. And the companies who are producing petroleum products will be in a position to claim the input credit of whatever GST paid on the inputs they use, whether it is service inputs or goods, raw material which are used, which bear the GST. So that credit will be given to them, whereas the current taxes will continue under the zero rate regime outside GST as it is today. So there is no much of a change in the revenue streams of the government. So the state government need not worry much about it. So as a result, the only reduction, if at all, would be that what is input taxes which is paid under GST regime is getting given back to the petroleum dealers or manufacturers. Okay. So that is the only downside as far as the government is concerned. So I don't think that is a great point to stall the GST. Okay. And as entry tax is concerned, I think there is a consensus to say that entry taxes will be subsumed in the GST regime. Okay. So that's a great relief.
Yeah, and that at least removes one more thorn. Sachin, we'll have to leave it at that. Thank you very much for joining us with your inputs, your views on both the tax rate as well as on the petroleum tax arrangement that seems to have been hammered out between the centre and the states.